Pramod Patwari, CFO of Balrampur Chini joins us now. Mr. Patwari, good morning. Thank you for joining us. Let's first understand where the sugar cycle is headed. A lot of moving parts are there. I read a headline a couple of days ago which said that sugar prices have plunged. That's one headline. Second, monsoons are going to be strong. So if you have to connect the dots here, because with commodities we have to always look forward rather than looking backward. How do you see the cycle moving?
Good morning. So if you are talking of the domestic sugar prices, currently we are selling sugar at around 39 rupees per kg. I don't think the domestic sugar prices have plunged. These are very strong prices. Now, we have to go slightly the last year why the government took a decision to rationalize the ethanol production. We began the last year with an inventory of around 5.5 billion ton, and the expectation at that point in time was that India is going to have a lower. As a result of that, in the election time and government was fighting with the inflation, they took a decision to rationalize the ethanol production. Now we all know that sugar season 23-24, India is going to have a net production of around 32 billion. And as rightly said by you also, that IMT has given an estimate that monsoon is going to be above normal. Initial estimates at our end suggests that we are going to have a production of around 31 million ton in the next year, which is a gross production before any diversion. So we will be beginning this year with a 9 million ton of inventory. To add to that is around 31 million ton of gross production. And if you take into account 29.5 million ton of consumption, then we will be left with around 10.5 million ton of closing inventory. Now, this will leave ample space or scope for the government of India to come back to its program of ethanol diversion. We are very optimistic about that. We see that in the next year, after a better visibility of monsoon, maybe post August or September, we are going to hear the announcement on the ethanol diversion.
So do you think that given that things could look up for the sugar sector and at least on the ethanol production, you are likely to make it up for what you lost in terms of your drop in volumes in the sugar and the distillery segment in Q4? Will you make it up in Q1?
So Q1 will be different because whatever decision will come, it will come for the next year. So the impact will be felt maybe in the last quarter of FY25 and thereafter FY26.
Where is the cycle of ethanol production headed? Because that in a sense is the most exciting part for a shareholder, that sugar companies have moved ethanol companies. Ethanol is where the focus of the government is, and this is where the source of energy is moving. How do you see the ethanol cycling moving in next couple of years?
So industry has already created a capacity to meet the government of India's requirement of 20% ethanol blending. So the last 2 years were slightly lower in terms of sugarcane availability, as a result of which there was some rationalization to come. Now, as we are expecting that maybe next year, sugar production in India will touch again its all-time high. So if that be the case, then ethanol diversion into sugar is the only solution. So we are very optimistic about the government of India's 20% ethanol blending program. And accordingly, we are seeing that the ethanol production and volume to go up only from here. Capacities are already in place.
80 crores, 780 crores what you've reported for the last year. FY25, how do you see it changing in terms of a mix of sugar, pure sugar versus ethanol?
So as far as FY24 is concerned, I think the revenue from the distillery segment came at around 26%. And if you recall 1.5 year or 2 year back, we were giving the guidance that our intent is to have revenue from the distillery segment in the region of 33 to 35%. That got slightly derailed because of this temporary tweaking in the ethanol policy. Once that policy is in place and we have done our background work in terms of cane varietal replacement, so we again look forward to our FY26 numbers in terms of our distillery volume.
I wanted to just talk a little bit about the distillery segment as well in terms of the revenue, which had come a little bit lower on a year-on-year basis. That was largely due to the restriction on the sugar division towards ethanol. And can you just give us a sense as to what the outlook would be for the distillery segment revenue?
So if I have to assume that FY ethanol year 24-25 will be a normal ethanol year, then in that case, we will continue to use our Mejapur plant as well as the Balrampur plant. Balrampur plant in a mix of juice-based distillery as well as B-heavy, and we will get back to our original targets of around 30-32 crores liter annually ethanol production, along with 3 crores liter of ENA production. But that can happen only in 25-26 once the government restores the ethanol blending.
Of sugarcane, it's very easy for us to say, okay, India will consume more fuel which would be blended, and globally the experience has worked very well. But India has something very basic and unique, which is that sugarcane is getting diverted for fuel, and underlying sugar prices may go higher, which means somewhere what government did in terms of intervention, they may do it in the future also. So it's all great to talk about, okay, ethanol capacity should go up, that's the future. But what about ganna, sir? Sugarcane bhi to hona chahiye.
So, Nikunj, only 2 years back, we were struggling with around 40 million ton of India's sugar production. So that point of time, we resorted to export. Now, because of the government policy, the ethanol capacities are already in place. So I don't see that there is a risk to the availability of sugarcane. Of course, it's an agricultural commodity. 1 or 2 years can always give you a surprise. But by and large, if you see the history, sugarcane is always available.
Mr. Patwari, this recent diversification that you've made into the new line of business, venturing into polylactic acid, is that a conscious strategy to de-risk from ethanol and sugar?
So again, this is a forward integration project which we have announced. It will use sugar as a raw material and we will produce polylactic acid. So it's a very conscious decision. Idea is to have at least 50% of revenue to come from non-sugar business.
How much would you be spending in this? And what is the basic requirement for you to make money here? I mean, is this something, when you say forward integration, you'll have to invest in distribution? Do you think you need to make different supply chains? For you to succeed here, what are the plans in place?
So Nikunj, we have already announced that this will require a capex of around 2,000 crores, and it will be funded through a combination of debt and equity, debt to the extent of around 1,200 crores. As of now, we do not have any clearance from the board of directors for protecting our business interest to share any financial numbers. So as and when we get that permission, we will surely share with you all.
So 2027, if we are engaging in a similar conversation, what kind of revenue mix you think which will come, which do you think will be there for Balrampur Chini? How much will come from sugar? How much will come from ethanol? And how much will come from new incubated businesses?
I think I have already answered this. The intent is to have around 50% of revenue to come from non-sugar business.
No. Will that include ethanol and new business also? I mean, I know you've answered 50%, but I'm trying to understand, will ethanol be part of non-sugar or you include that as part of sugar?
Yeah, non-sugar. Ethanol will be a part of non-sugar.
Okay, so 50%
ethanol,
sugar.
cogeneration and PLA may have around 50%.
Okay. And when you migrate from being a non-sugar company, whether it is 40 or 50, the intention is there. So then there would be a reboot in terms of your operating margins? Will there would be a reboot in terms of how the cycles would move for you? Because with sugar, the problem is that ultimately it's a commodity. 2 good years, 3 bad years, 3 good years, 2 good years, 2 bad years.
So if you see our past numbers, even in bad years, we were able to report more than 500 crores of EBITDA. So that has been made possible only and only because we had ethanol in our portfolio. As a result of lower sugar, which we need to sell, it gives a bump up in terms of our ability to push the sugar prices as well. So definitely PLA as well as ethanol is going to have a much better margin than the sugar.
Very great to have you on the show. Thank you so much for taking the time out and speaking with us. We're going to take a very quick break.
If you like this video, then like, share and subscribe to ET Now.